Bitcoin just dropped below $100,000, and every headline is screaming sell. More than $1 billion in liquidations just got wiped out, and fear is hitting a fever pitch. But while most people are running for the exits, they're missing the real story. This isn't just a crash, it's a reshuffling of the deck. A new class of altcoins is quietly getting ready for a massive run. And I'm about to show you exactly where the smart money is going. The panic you're feeling? That's exactly what the smart money wants. They love this level of fear because it lets them buy up assets at a huge discount. While retail investors are panic selling, institutions are strategically moving their capital. They get a basic truth about this market. A dip in Bitcoin doesn't mean the bull run is over. It means the real party for altcoins is just getting started. Today, we're not just looking at charts. We're going to break down where the capital is flowing, pinpoint the narratives driving the next wave of growth, and uncover both the established giants and the underground gems that are set to deliver explosive gains from this shakeup. What's happening right now isn't a reason to be scared. It's the biggest opportunity of this cycle. By the end of this, you won't see the market with fear, but with total clarity. All right, let's get right into it. To see the opportunity, you have to understand the problem. Why did Bitcoin, after marching so confidently toward new all-time highs, suddenly trip and fall below the huge psychological barrier of $100,000? The mainstream media gives you the surface-level answer. They'll mumble something about profit-taking and flash scary headlines, but they're missing the point. What we just saw was a perfect storm that created the fear we're seeing today. First, let's talk about the big story everyone's been watching, the ETFs. For months, Bitcoin ETFs were the engine of this bull run, buying up BTC and creating a supply shock. But in the last couple of weeks, that buying has slowed down, with some days even seeing net outflows. This isn't necessarily big money losing faith in Bitcoin. It's strategic de-risking, as Bitcoin neared the 100K mark. These funds, which have risk managers to answer to, started taking profits. The drop below that key level triggered a wave of automated sell orders and stop losses, which is reflected in the billions of dollars in liquidations across the market. Add in some hawkish signals from the Federal Reserve, and the appetite for high-risk assets took a hit. This brings us to the Fear and Greed Index. Just a couple of weeks ago, the index was deep in extreme greed. Now, it's plunged into extreme fear. This is classic market psychology. Tops are made in extreme greed when latecomers FOMO in, providing liquidity for early investors to sell. Bottoms, on the other hand, are forged in extreme fear. The current reading shows the market is overwhelmingly pessimistic, which has historically been a huge contrarian buy signal. The weak hands and over-leveraged traders have been flushed out. This is a healthy, necessary cleansing for the market. Third, look at Bitcoin dominance, its share of the total crypto market cap. Right after the slide, you might have noticed dominance ticked up a bit. That's a flight to quality. When panic hits, the first reaction is to sell off the riskiest assets, small, volatile altcoins, and move into the relative safety of Bitcoin. It's a short-term reflex. But here's the critical part. Once the market finds its footing, that capital doesn't just sit there. It starts hunting for higher returns. This is the start of the great capital rotation, a pattern we've seen in every single market cycle. Finally, let's zoom out and look at the 4-year cycle. Every cycle has had major corrections, many of them 30 to 40% or even more. These pullbacks aren't bugs, they're a feature. They shake out the tourists and let the market build a stronger foundation before the next explosive move up. What feels like a disaster in the moment is, on a multi-year chart, just a standard bull market correction. The idea that this is the end of the cycle is being pushed by people who either don't get these historical patterns or who want to buy your coins on the cheap. Don't let them. So what's happening? We have institutional profit-taking, a market-wide flush of leverage, peak fear, and a temporary flight to Bitcoin. Each of these, while painful now, is a key ingredient for the next and often most explosive phase of the bull market, the real altcoin season. The problem of Bitcoin's slide is actually the catalyst for the solution we're about to dive into. Now that we get the anatomy of the Bitcoin dip, we can focus on the solution. This is the core of this video, so pay close attention. Bitcoin's slide below $100,000 isn't the death of the bull market. It's the birth of the altcoin supercycle. This is where life-changing gains are made, but you need to understand how money moves through the market. Think of the crypto market like a solar system. Bitcoin is the sun. Its gravity dictates the orbits of all the other planets, the altcoins. For months, Bitcoin has been the star, sucking in all the capital and attention. Its dominance grew, and most altcoins bled against it. But what happens when the sun's light flickers for a moment? The planets don't fly out of orbit. Instead, they start to shine in spectacular new ways. This is the great capital rotation theory, and it tends to unfold in a predictable sequence. Phase 1. Bitcoin dominance peaks. We just talked about this. A market shock sends capital washing into Bitcoin for safety. We are at the very end of this phase right now. Phase 2. Rotation into large cap altcoins. This is what's next, and it's already starting. Once the dust settles and traders see Bitcoin stabilizing, they don't just pile into risky small caps. They move into the next safest assets with high growth potential. The established powerhouses like Ethereum and Solana. Money flows from Bitcoin into these blue chips, and we start seeing the ETH BTC and Sol BTC pairs climb. This is the market signaling its risk appetite is back. Phase 3, the altcoin waterfall. After the large caps have their big run, investors get greedy again. The profits they made on ETH and Sol start to waterfall down into the next tier. Mid-caps with hot narratives like AI, real-world assets, RWAs, and DePIN. This is when you see whole sectors of the market light up at once. Phase 4. The explosive gem season. Finally, as euphoria starts to creep back in, that capital trickles all the way down to the micro-cap gems. These are the projects with 50x, 100x, or even crazier potential. It's the riskiest phase, but it's where generational wealth can be made if you're positioned correctly. So, where are we now? We are right on the edge of phase 2. Capital is coiled up in Bitcoin, ready to spring. We're already seeing signs of accumulation in key large caps. Billions of dollars in institutional capital are not leaving the space. They're just repositioning for the next leg up. The continued growth of stablecoins provides the fuel for this rotation to happen. There are billions of dollars sitting on the sidelines waiting for the green light to flood into altcoins. This rotation is the solution. While most people are frozen, staring at the red on Bitcoin's chart, we're watching the flow of capital and getting ready for the flood. Our strategy is to position ourselves in the assets that are first in line to catch this wave. Before we get to the underground gems where the 100x gains are hiding, we have to talk about the first wave. These are the generals that lead the charge. When capital rotates out of Bitcoin, it flows into the most established, liquid, and trusted altcoins first. These are the powerhouses that institutions are already comfortable with. Ignoring them is a huge mistake. First up, the undisputed king of altcoins, Ethereum. As Bitcoin wavers, Ethereum is gearing up for a move that will surprise a lot of people. Major signs of strength are being completely ignored in all the panic. Right now, Ethereum is consolidating, with analysts pointing out that a push toward $3,900 to $4,000 is on the table in the coming weeks. That's not just wishful thinking. It's backed by on-chain data showing significant whale accumulation during this dip. The smartest players are buying, not selling. But the real story for ETH goes way beyond the charts. The fundamentals are stronger than ever. First, the Ethereum ETF narrative is a sleeping giant. While Bitcoin ETFs have hogged the spotlight, the growing institutional appetite for ETH is real and building a permanent structural demand that didn't exist in past cycles. Second, the Layer 2 ecosystem on platforms like Arbitrum and Optimism is finally mature. They are handling massive transaction volumes, which has crushed fees and congestion on Ethereum's mainnet. This fixes one of the biggest complaints about Ethereum and unlocks a new wave of users. All that value eventually comes back to ETH, which acts as the security and settlement layer. While some analysts point to long-term holders selling, that's a natural part of the cycle after huge rallies and sets the stage for new buyers to establish a higher floor. Ethereum is the first stop for institutional money moving out of Bitcoin. It's seen as a productive asset, a world computer. Its consolidation isn't weakness. It's a launchpad being built for a move toward 5 figures. Next, the primary challenger to Ethereum's throne, the high-speed monster, Solana. Solana has cemented its place as the leader in raw performance and transaction speed. While Ethereum scales with Layer 2s, Solana does it on Layer 1. Offering lightning-fast and cheap transactions, this has made it the go-to chain for things like high-frequency trading and the recent wave of meme coins that brought millions of new users into its ecosystem. Currently, Solana is building a floor around the crucial $200 level. The market is digesting its huge gains and waiting for the next catalyst. And that catalyst is massive. The prospect of a Solana spot ETF. Filings have been submitted in the US, and the conversation around approval is getting louder. We all saw what ETFs did for Bitcoin. Grayscale executives have projected that Solana ETFs could pull in over $5 billion in inflows within 2 years. And even in this shaky market, existing international Solana investment products have shown relentless demand, a huge sign of relative strength. There's also a new narrative emerging: corporate treasury accumulation. As companies get more comfortable with crypto, they're looking beyond Bitcoin. Solana, with its high performance and developer buzz, is a top candidate. This, combined with the ETF demand, creates a powerful squeeze on Sol's available supply. Solana is where capital goes when it's looking for a high-growth, large-cap alternative to Ethereum. Its technical edge, paired with the impending flood of institutional capital, has it primed for a dramatic breakout. Finally, in the powerhouse category, we have the silent backbone of crypto, Chainlink. Chainlink isn't a flashy Layer 1. It doesn't have a viral meme coin. It has something more important: its critical infrastructure. Chainlink is a decentralized Oracle network. Simply put, it's the bridge that connects blockchains to real-world data. Without Chainlink, DeFi protocols wouldn't know asset prices, and tokenized real-world assets couldn't connect to off-chain information. It's the plumbing that makes almost everything in crypto work. Despite its vital role, Link has been chronically undervalued. That's starting to change. Analysts are highlighting its strong fundamentals, with some setting short-term price targets near $22, a nice jump from its current level of around $18. But the long-term vision is even bigger. Its cross-chain interoperability protocol, CCIP, is a game-changer, allowing different blockchains to communicate securely. Pilot programs with giants like Swift, which connects thousands of global banks, signal that Chainlink is seriously courting the institutional world in a way no other project can. As the tokenization of real-world assets, a multi-trillion-dollar opportunity heats up, Chainlink will be at the very center. The Link token is used to pay for services on the network, creating continuous, growing demand. With a capped supply and increasing utility, the supply and demand setup for Link is incredibly bullish. An investment in Link is a bet on the growth of the entire crypto space. It's the essential infrastructure play, and the market is just starting to wake up. These three, Ethereum, Solana, and Chainlink, are your strategic plays to capture the first, most powerful wave of capital rotating out of Bitcoin. Okay, so you've anchored your portfolio with the powerhouses, but this is where the life-changing gains are made. This is where we go into the trenches to find the underground gems the mainstream hasn't noticed yet. The potential for a 50x or 100x return lies here, in the next explosive wave. We're going to tackle this by looking at the most powerful narratives for 2025 and beyond. Let's start with the hottest narrative on the planet: artificial intelligence. Our first gem is IONET.io. Think of IONET as the decentralized NVIDIA of Web3. There's a massive global shortage of GPU computing power thanks to the AI boom. Centralized providers like Amazon Web Services can't keep up, leading to insane costs. IONET solves this by creating a decentralized network that pools unused GPU power from data centers, crypto mining farms, and even gaming PCs around the world. Built on Solana, IONET can deploy huge GPU clusters for AI tasks at a fraction of the cost. Some estimates say up to 70 to 90% cheaper. This is a game changer, democratizing AI development. With a market cap hovering around 117 million, it's a minnow with whale potential, sitting at the intersection of AI and DePIN, decentralized physical infrastructure networks. Our second AI gem is Oraichain. If IONET is the hardware, Oraichain is the intelligence layer. Oraichain is a layer 1 blockchain built to integrate AI directly into smart contracts. Right now, smart contracts are dumb. Oraichain fixes this by acting as an AI-powered oracle, letting smart contracts get verifiable outputs from AI models. Imagine a lending protocol that uses AI to generate a credit score, or a smart contract that uses Face ID for wallet recovery. Oraichain is building the tools for a future of verifiable AI, solving the black box problem of traditional AI and bringing blockchain's transparency to machine learning. Next, let's move to our second major narrative, the infrastructure of tomorrow. Our first pick here is Celer Network, CELR. The crypto space is fragmented across dozens of chains. Moving assets between them is slow, expensive, and risky. Celer is a top-tier interoperability protocol that makes cross-chain communication seamless. Its C-Bridge has already processed billions in volume across over 40 blockchains, proving it has real adoption. The most compelling part? Its valuation. Despite its proven tech, Celer has a market cap of only around $65 million, which is tiny for such critical infrastructure compared to multi-billion-dollar competitors. A re-rating for CELR feels less like a matter of if and more a matter of when. Our second infrastructure gem is Hyperliquid. Hyperliquid is a next-gen decentralized exchange, DEX, that's been quietly putting up huge numbers. It's a high-performance Layer 1 blockchain built for one thing: derivatives trading. It competes directly with centralized giants like Binance and Bybit. What's so compelling is its performance and tokenomics. The protocol generates substantial fees and uses a large chunk of them to buy back and burn hype tokens, creating constant buying pressure. This mechanism has already proven to be a powerful engine for value accrual, demonstrating the platform's massive cash flow. The recent HIP-3 upgrade, which allows for permissionless creation of new futures markets, is set to unlock even more volume. While analyst opinions are mixed, the fundamentals are incredibly strong, making Hype a direct bet on the future of on-chain finance. Finally, let's talk about the elephant in the room, the high-risk, high-reward meme play. For this category, we're looking at Maxi Doge, Maxi. No, before you click away, hear me out. Meme coins are a powerful force in crypto. The key is finding them before they go viral. Maxi Doge is a meme coin currently in its pre-sale phase, the earliest possible stage. What makes it different? It swaps the cute Doge aesthetic for an intense, gym bro, high-leverage trading culture. This self-aware, funny take on crypto's degen side has found a strong fit with a new generation of traders, with its pre-sale already showing strong early interest. The pre-sale price is around 0.000266, with price increases at each stage rewarding early investors. Let's be crystal clear. This is a lottery ticket. It's a highly speculative play for a small part of your portfolio, where a tiny investment could have an asymmetric payoff. The vast majority of meme coins fail, but the ones that catch fire, driven by culture and community, can outperform everything. Maxi Doge, with its unique branding and pre-sale momentum, is an interesting candidate. It's a bet on culture, And in crypto, culture is a hell of a price driver. These underground gems, IO.net, Oraichain, Celer, Hyperliquid, and Maxi Doge give you a diversified way to play high-growth narratives, from AI and infrastructure to the wild potential of meme culture. CTA, look, the market moves fast, and the window to get into these projects at these prices won't be open for long. To stay ahead, you need analysis that's deeper and faster than I can give you in these videos. That's why I pour hours of research every day into my free newsletter. It's where I share my deep dive reports on the gems we discussed today, and others that are still completely off the radar. I give you the chart setups, the fundamental catalysts, and the entry zones I'm watching. The link is at the top of the description. If you're serious about turning this market correction into a life-changing opportunity, click that link and join thousands of others who are getting ahead of the herd. Don't miss the next big move. So let's wrap it up. The market is bleeding. Bitcoin broke below $100,000 and FIU is everywhere. This is the moment of maximum opportunity. While others are selling, the smart money is buying. This violent shakeout isn't the end of the bull market. It's the fuel for the real altcoin supercycle. We follow the money, mapping out the capital rotation from Bitcoin into powerhouses like Ethereum, Solana, and Chainlink. These are your blue chip altcoins, first in line to benefit for returning confidence. Then we went deeper, exposing underground gems set for explosive growth. We looked at the AI revolution with IO.net and Oraichain. We uncovered undervalued infrastructure in Celer and the high-performance trading engine of Hyperliquid. And we even touched on a high-risk, high-reward cultural bet like Maxi Doge. The strategy is clear. While the herd is panicking, you have a blueprint. You have a framework for understanding the market and a curated list of projects to watch. The narrative is shifting from Bitcoin's price to the wild innovation happening in the altcoin space. This is not the time for fear. It is the time for calculated conviction. The coming weeks will be volatile, but for those with a plan, they could also be incredibly profitable. Thanks for joining me. If you got value from this, do me a favor and hit that subscribe button and turn on notifications. You don't want to miss the updates coming as this all unfolds. Now, check out the video on your screen for my top 5 crypto narratives that will dominate 2026. Stay sharp, and I'll see you in the next one.